Hello and welcome to TA for Traders. It's Friday the 14th of July. I'm Nigel Croft. In this short video we'll be looking at the charts of gold once again. What we'll see is that it remains bearish. Those moving averages are bearing down on the commodity. They're about to create, or they already have created some, but they're going to be more bearish crosses being created as the moving averages move down through each other. This will be a bearish scenario for the market. The only slight upside is that in the 4-hour chart there is a potential head and shoulder, and also the RSI and MACD are indicating on the 4-hour chart a slight pickup in momentum, and that's the only positive I can find at the moment. Let's look at those charts. So here, as usual, we have the daily chart. Each candle represents 1 day's trading, and immediately you can see that all the moving averages that I have drawn on the chart, which are the key moving averages that traders look at, so the 20, 50 and 200, are all moving downwards and are all slightly above the price of gold at the moment, and are a downward influence on that price. You can see that in the excuse me, at the end of June we went up to the 50-day. That was moving down and created resistance. We touched it over 4 or 5 days, and then the price then collapsed. Obviously this was Fat Finger Day, which was the 3rd of July. What we're seeing is that the moving averages are crossing each other as they come down. So we've had the 20-day cross the 50-day, both moving down, which is a bearish sign. Excuse me, and we're just about to get the 20 crossing the 200, also moving down. That will happen probably on Monday or Tuesday next week. The spot level at the moment has consolidated this week. But really I do expect a further downward pressure from these moving averages. On the RSI, you can see it's in a shallow downtrend, indicative of negative momentum, and it's below 50. At the moment, then we had a kind of a double bottom on the RSI, so just be aware of that. It didn't go to a new low when we came down to the low at the start of the week, so just monitor that for the moment. But it's not a sign as yet, because the low that we actually achieved was below the lows of the support that we had from the 9th of May. So really it was indicative of a downtrend. The MACD are still tracking down. On the weekly chart, and again we've got down tracking moving averages. 20, 50, 200 week are all moving downwards. The 20 is just crossing through the 50 over this next couple of weeks, and then it will bear down on the 200. Very much a rolling picture here. And as I said, the lows that we've just achieved were below the lows of May, so it looks like we are getting a downtrend being formed. RSI is again below 50, 44.3, and the MACD actually have just rolled over in a bearish picture. On the 4-hour chart, now this is the only chart at the moment that's maybe got some potential for upside. You can see that there's maybe a reverse head and shoulder formation being created with the left shoulder, head, right shoulder. That would need a break above 12.25 to be confirmed. Also on the RSI, you can see that it's trending sideways. It is marginally above 50 spot 43. And the MACD are also flatlining, so could actually go in either direction. So not as bearish on this. The 20-day, the 24-hour moving average has now moved up again, and we are above it as I speak. but we are at the resistance of the downtrend in 50. So the mixed signals on the moving averages as well. I think you need to keep an eye on this head and shoulder formation and keep an eye on the RSI. Now looking at support and resistance levels, the first resistance is at the 200, 12.30 spot 55. Obviously the 20 is very close to that at the moment, and then there's the 50-day 12.47 spot 54, with supports coming in 10th of July 12.04 spot 89, and then that old support from the 15th of March 11.97 spot 68. So that's been TA for traders, having a look at the gold price once again. The key factors to bring out from this video are that the price of gold on the chart still looks bearish. There's resistance to the upside from the moving averages. We're going to get bearish crosses on those moving averages, and the only potential upside could be from a reverse head and shoulder on the 4 hour, and if the RSI on the 4 hour ticks up in the short term. Many thanks for watching this video. Please remember, these videos are for information only and are not an investment recommendation. Thank you for watching.